My name is Andrew Williams. I'm the president of New Pacific Metals, a company that is discovering and developing world-class silver and gold deposits in Bolivia.
Andrew, thank you very much for the introduction. Nice to meet you. It's the first time we've spoken. When did you join the company, and how come we haven't spoken before?
Well, I've just joined roughly 3 months ago in January of this year, and previous to joining New Pacific Metals, I spent 11 years on the buy side with a well-known institutional investment firm as a portfolio manager. So this is certainly my first role in the public company space, which might explain why I'm new on your radar screen.
Did you cover New Pacific Metals from your position as an analyst?
Yeah, absolutely. Any major industry discovery certainly warrants the attention of any resource specialist investor. And when New Pacific made the announcement of the Silver Sand discovery, it certainly generated a ton of buzz in the industry, and that was early 2019 when those first drill holes really started to come out. And then what really kicked the company into new gear was in late 2021, the company started publishing drill results from its Karangas discovery, which is the second major mineral system that the company has unearthed the old-fashioned organic way, grassroots exploration, and having two organic discoveries in an industry where discoveries just aren't being made with anywhere near the frequency they used to be. It certainly came right up the flagpole in terms of attention and interest as an institutional investor.
I was amused to see those results coming out with the Karangas discovery, because I've known the country manager for New Pacific for 25, 26, 27 years, and way back in the late 90s, he was telling me about the potential of the Karangas thing. So for me, it was a great degree of personal satisfaction to see the company coming up with those results. But that's just my personal kind of connection with it. But what made you leave what was probably a very kind of safe seat in a corporate office in Canada to go exploring in the wilds of the South America?
Yeah, good question. Certainly a bit of a gear shift in terms of my career trajectory. Being a portfolio manager is a wonderful job. It's intellectually very stimulating, but you do spend a lot of time in front of your computer screen looking at models and Bloomberg statistics. And I certainly had a bit of an itch to get out there and embark on a new adventure, both in the public company investor-facing role, but really rolling up my sleeves and getting involved in a particular operation, or in our case, operations with Silver Sand and Karangas. And so that's sort of part one as the personal motivation side. But as far as which company to jump into, and what I came to appreciate was just how rare new discoveries are. And if you look at the really successful companies over the last, say, 10 years in this industry, they're either making discoveries themselves, which is kind of the obvious. That's how you create value in this industry, as you find new metals. But often it's tough to predict and find those ahead of time. Often even the geologists on the ground aren't aware that they're about to make a discovery. But the second piece being, great companies also, they don't necessarily have to make a discovery themselves. They can develop a great discovery and turn it into a great mine. And that's a recipe book that we've seen quite successfully over the last several years. Some great companies have accomplished that feat. And I think the reason why more don't follow that path is just the discoveries aren't there to go around. And that's why New Pacific, having made two in just such a short amount of time of the size and scale and the quality of Silver Sand and Karangas, certainly that was the pull from my perspective on joining New Pacific.
And so, does that mean that the strategy is all a full push towards advancing Silver Sands to kind of a construction decision? I mean, is that the focus of the company?
Yeah, for the present time, it certainly is on the Silver Sand aspect of it. Any junior always has the option to pursue development in house or find a buyer that can do it that way, and we're certainly open to all possible strategic outcomes. But in either scenario that you pick, the way to maximize value is to put our heads down and really do a lot of that strong, heavy lifting and lay a foundation for the development of what will be a multi-decade asset. So we're certainly marching ahead this year. We've completed now an updated resource estimate last fall. We've published a PEA study in January of this year, and we've got our heads down and are laser focused on completing the permitting activities this year at Silver Sand, completing the pre-feasibility study, and we're very much taking the steps necessary to be able to finance and construct and ramp up Silver Sand ourselves should we proceed down that strategic path.
Your valuation is quite strong relative to your NPV. I mean, so you've got the NPV 8 on Silver Sands was 700. Sorry, forgive me. What was it? It was north of $700 million US, and your market capitalization in US is about $430 million. So you're trading at kind of 55-60% of your NPV, which is a significant premium to peers in other companies in the sector. Maybe they're offering more value than at the PFS stage, or even between the PEA and PFS. Is your valuation a bit rich for how advanced your project is?
I certainly wouldn't say so. When you just look at Silver Sand itself, so let's say, okay, we're trading at roughly half NPV relative to the PEA study, but you look at established silver producers, they often trade at multiples of NPV, and when you look at just the pure production profile from the Silver Sand project, so in each of the first 4 years of that PEA mine plan, we're going to be producing roughly 16 million ounces of silver per year. And to put that into context, silver industry giant Hecla, their 2023 silver production guidance is between 16 to 17.5 million ounces of silver. So the production from this one project alone will produce a similar scale as what a $3.5-4 billion company like Hecla produces. Now, granted, they do have some byproduct production from other mines, but the sheer size and scale of this deposit, high quality deposits command a premium in this industry. This is a pure silver deposit, and it's just strategically a very important asset. And I would argue that we should see it trading at multiples of NPV, not only aligned with its silver production peers, once we do bring it to that level, but recognizing the scarcity of a large pure silver deposit, just on Silver Sand alone, I think that there's plenty of runway to go here for a valuation standpoint, and this doesn't even factor in this incredible discovery we've made at Karangas in the past 2 years that we really feel like we're getting no credit for in our share price. So no, I wouldn't say by any stretch of the imagination our valuation is particularly rich.
Remind me of the CapEx figure from the PEA, please.
It's $308 million is the initial upfront CapEx, which when you compare that to our market cap, as you mentioned, $450 million US, it's certainly a financeable and buildable project for a company of our size and scale, which might also explain part of the reason why we're not trading at say 0.1 or 0.2 times NPV, which you could have a junior with a multi-billion-dollar CapEx project and a $50 million market cap or something like that. No, this is very much a project that's imminently financeable and buildable for a company of our size and scale.
Which brings me to Bolivia, because if you're $300 million into the US is one thing, but $300 million into Bolivia is a different question. Could you talk to me about the political risk, the perception of, or what else is happening in Bolivia at the kind of high level to give investors and shareholders in New Pacific the kind of comfort that there's money on the parallel money coming into Bolivia? Yeah,
great question. And when you think about Bolivia, the tone of your question is very much it's a frontier country. But when you look back and rewind the clock, I mean, this is Bolivia is home to the largest silver deposit that's ever been made in the history of the world, the Cerro Rico mine, which is 33 kilometers away from our Silver Sand project, and it's been operating for almost 500 years, continuously. And that's really laid the foundation for a very rich mining heritage in the country. And mining is roughly 30% of the national economy in Bolivia. It's the 8th largest silver producer globally. So this is very much a mining country. And if you look at the status of large-scale foreign-owned mining operations, there's really three major operations that have been built in the sort of the mid 2000s. The biggest of which is the San Cristobal operation, which is run by Sumitomo for 17 years, almost continuously uninterrupted. It's been a fabulous mine for them, one of the world's largest zinc producers, 50,000 ton a day operation. And you go down the list, Pan American Silver, their San Vicente operation has been going for almost 2 decades here. Very successful operation. They're actually our second largest shareholder. And certainly when you think about Bolivia, someone like Pan American who's got experience in the country, I wouldn't see them doubling down in the country if they didn't feel like there was something there. And then Core Mining built another wonderful operation, San Bartolome, in the mid 2000s. That was one of their most profitable operations for many years there. It's since gone to Andean Precious Metals, who's running that. So there's very much a solid precedent for great mines having been constructed and operated in Bolivia. Now, if you think about timelines, there hasn't been one built here now in 15 years or so, and that really goes to the country in 2005 elected Evo Morales, which was certainly a swing to the left, and that really gave a lot of foreign investors pause, uncertain with how he might come out and treat new foreign investment. But just like in any of these countries, the windows, they open and close, and we feel like we're now a long time removed from the election of Evo Morales. We're now 3 presidents past him, him and a transitional government, and Lucho Arce, who's now the current president of the country, who was a former minister of finance. He's got a master's degree in economics from an institution in the UK. And so, he very much understands the need for foreign investment in Bolivia. But now we're this new mass party. Really, the dust is settled, and the country's gone through this reset. And I think the roadmap and the runway that we've got in front of us is quite clear. That the taxes and the royalty regime in the country are very clearly laid out in the mining code. There's free convertibility of capital, no foreign currency restrictions, unlike countries like Argentina. And also, if you just look at how Bolivia went through its political reset in 2005, we've gotten that out of the way. And you look at other countries like, say, Peru, Mexico, Chile, they're really struggling with some of these same issues as what Bolivia struggled with and struggled through in the mid 2000s. So we feel like we're really entering a nice window here for a new wave of foreign mining investment, because those great mines that were built in the 2000s, a lot of them are mines don't last forever, and you got to put money back in the ground to explore, to find new ones, to build new ones, and this is what the country recognizes. And so when Lucho Arce was inaugurated in late 2020 for a 5-year term, they released a policy document highlighting 5 new mines in 5 years. That's their goal. They get it. So we're very much at the forefront of this movement, and we feel like we've got a really interesting window here to come in and make some hay and establish ourselves as the preeminent partner in Bolivia for new mine development.
And is there a thank you, that's a comprehensive answer. Has there been any change in the tax and the royalty regimes? I mean, has that did Evo Morales introduce change, or has it been steady for a while?
Yeah, it's been really steady. And when you think about the San Cristobal operation, they've operated through really, 3-4 different presidents with the same regime. It's a very clear 25% corporate tax. There's a 12.5% mining tax. You get a 5% credit if you produce doré. There's a 6% top line royalty, and that's really the bulk of the taxation regime, which some might look at and go, oh, geez, that's a little somewhat onerous for a country like Bolivia. And it's a fair point. If you look at some other countries in the world, there are lower tax and royalty rates, but I look at it as a positive, because if you look at companies and mining projects that have got themselves in trouble, it's often because they've got a sweetheart tax and royalty regime that the government's granted them, and then at one point, either it's a new president or somebody wakes up and comes to terms with the sweetheart deal, and that's when they end up going back to the company and shaking them out for potentially more. So I think it's a fair tax and royalty regime, and it's been stable for many years now.
No, it would, as long as you can define sufficient number of commercially viable deposits that work in that tax regime, and if you can get the returns while with that tax load and that royalty load, then that's fine. Obviously, if the tax regime is so onerous that it doesn't elicit capital investment, then you've got an inappropriate tax load for your geological opportunity. So that sounds as if 6% royalty on the headline is a lot, but if you've got the geological opportunity, then it might be able to bear it. And certainly, the IRR from your PEA of 39% is in the healthy category, above 30%.
Yes, we like to think so as well.
You talk about the deliverables. You recently put out an update for 2023, the plan for 2023. You talk about getting the pre-feasibility study completed, the environmental impact assessment completed, and then the environmental impact statement submitted, and the mining production contract. Could you just kind of go through those three things one by one? But let's first of all start with the PFS. What are the kind of the building blocks of the technical work for that PFS?
Yeah, I think going into the PFS from the PEA, I think point one is that our PEA unusually had over 90% of the mineral inventory sitting as measured and indicated resources. A lot of it drilled down to 30-meter centers. So that's a big check mark as far as often a junior might have a bulk of a PEA done and inferred, and then have to spend the next year or two really upgrading that. We've done that heavy lifting, so big check mark for going from PEA to PFS. There's some additional geotechnical work, some waste rock characterization work, and then really just sharpening up the estimates around mining costs. Like, we're going to go out to specific mining contractor to get firm quotes on the mining costs, and some of the capital cost items. Like, I think in our PEA study for the mill, we got quotes for the biggest components, but all the small components, like some of the electrical and instrumentation and the nuts and bolts, we're going to really sharpen our pencils on those numbers. I think from a scope perspective, not a lot of change is expected in that PFS, but certainly we're going to look at just increasing the level of precision there. And then
in a PFS, you normally do test a number of different scopes. You normally do run a bunch of trade-off studies. So, I mean, what will you be looking at in terms of kind of optimization? Will you look at throughput rates or kind of cutoff grades? What are the kind of the most obvious variables that jump out to you?
Yeah, good question. So again, talking about how we did a lot of that drilling heavy lifting up front, we also did a lot of that trade-off work heavy lifting up front as well. If you go back the last couple of years, it was debated hotly internally here in the company, the processing method. How, because do we go heap leach? Do we go milling, conventional milling? And those are really the two options that we seriously consider. There's also to produce a flotation concentrate, which really made no sense given that this is a pure silver deposit with no meaningful byproducts. So we're better off producing that finished product. And not only do we get the 5% reduction in the mining tax, you don't have to incur the transportation and logistics, and we get full payability. So that one's off the table. And then the heap leach versus the mill, leading up to the PEA study, we really concluded that because the grades are so high, 110 roughly grams per ton silver, which is 1.5 grams head grade, like you wouldn't put 1.5 grams material on a heap leach pad. That that delta in extra recovery that you get with a mill, it's just it really doesn't make any sense to go for the heap leach route. So I think we're really we've made the decision on tank leaching, and then throughput rate again. We feel like the 4 million ton per annum is really the sweet spot for this operation. So yeah, I wouldn't expect any meaningful scope changes in either of those areas.
Good, thank you. Environmental impact, permitting, monitoring. What's your take on that, please?
Yeah, so what we need to do is submit our EIS study, and then our in-country consultants have advised us that when we make that submission, it's a 3 to 6 month process to get approval. So we really got to work backwards and say, when are we going to make that submission? And that's something that our guys in country they're advising us that the fall of this year is a reasonable target date. And we do caution that we're dealing with human beings on the ground here. The biggest component in that is the community agreements. So they could come sooner or they could take longer, but our best guess here is in the fall of this year we'll be in a position to have those wrapped up and make our submission. But then if we go into the community agreements, the environmental side, the beauty of this project is it's there really are no controversial elements from an environmental perspective. You look at the water, that's typically the most sensitive issue of any project that runs into difficulties on the permitting front, and the actual the net impact on water availability of this project is going to be positive, where they get a huge amount of rain that falls in a wet season. So you get 3 months where you get 700 millimeters of rain, and then you get 9 months where it's bone dry. And so in that intense 3-month wet season, all this rain falls and it flushes away into the valley, into the river, and ends up in an ocean. It just doesn't get used. And then the remaining 9 months, there's no water. So we're going to build a 3 million cubic meter water reservoir and capture that excess rainwater so that we can use it continuously in our process plant throughout the year. But importantly, we're going to be able to release excess rainwater to the local communities during the dry season that they otherwise wouldn't have available. So that's something that from an environmental perspective, this is a fairly straightforward project. I think where we really have to put in the extra legwork here is on the community agreements, because there's 5 different communities that are going to be directly impacted by this project, of which 2 are the most significant. There's roughly 80 families or so, and this is represents a material change to their lifestyle that they've lived in for quite some time. And even though they're not a large community, they still want to know what's up. And so we're embarking on that socialization process. We're actually just kicking off a door-to-door campaign with those communities, because now that we've got this PEA study, we can actually talk to the direct impacts of the project. So that's really something that we're excited to be kicking off in earnest here over the next few months, is this door-to-door campaign with the goal to sign these community agreements, which is really the key input for us for meeting that fall submission target for the environmental impact study.
And those 80 families that are impacted, is it a relocation thing, or is it trucks coming past the door? What's the form of that affectation?
Yeah, all of the above. So our actual Silver Sand project, we own the subsurface rights to mine, but there's some additional surface areas that we require access to, and that involves leasing this land from the local community. So finalizing a lease agreement. And then secondly, there are, it's roughly, 50 families or so of those 80 that will need to be relocated. So we can either relocate them to Potosi or to Sucre, 2 nearby towns, or offer cash in lieu of relocation. But certainly, those are the two big ones that we need to really dig into in order to complete this exercise.
And there's always the opportunity for a cynical NGO to get in the way and to explain to them what the value is and hold you to ransom, and it still costs a huge amount of money, kind of in a worst case scenario. Is there any kind of legal recourse on kind of the valuation of land access or property? I
mean, there always is. It is not our intention to go down that path. I think if you go there, that means that the relationship has suffered. So we're very much in terms of insulating ourselves from, let's say, outsiders. The most important thing we can do is develop a really strong relationship built on mutual trust and respect with these communities, and that's really what our goal is that just serves us well in all facets to really bolster and insulate this project from any sort of outside criticism, is to continue to build strong relationships, which we've been on the ground now for 5 years. And talked about Hernan, our country manager. He's done an exceptional job building relationships with those local communities. So we're certainly going to continue to just press forward and do it the right way.
Good. Well, knowing the importance of those community relationships and that kind of that social contract across South America, I mean anywhere in the world really, but particularly in South America, it'll be, I think, a key de-risking step to see that you've got those community agreements signed up. And then the third point was the mining production contract.
Yeah. So, so our Silver Sand project is a 3 square kilometer land holding, and surrounding that is a 55 square kilometer land package that's currently owned by Comabol. They're the state-owned mining company in Bolivia, and we've signed an agreement with Comabol to have a joint venture where we can explore and mine and process material from that Comabol land in exchange for an additional 6% royalty. And that agreement that's been signed, the next big step is having it, and the final step is having it be ratified in a parliamentary session, which really involves us, ensuring that we've got the right relationships and making sure that we're keeping it top of mind, given that a lot of these folks in politics, they've got a million different things on their agenda, so we got to push to make sure that ours gets to the top of the priority list. But that's certainly the last and final key step in really unlocking the exploration potential of this belt, is having that MPC contract be ratified in a parliamentary session, which we're pushing towards, hopefully at some point later this year.
But effectively, you've got the commercial terms agreed with Comabol.
That's right. Yes.
And the reason, the strategic rationale for this is that later in the life of the asset, there could be exploration potential or resource potential that one could rationalize through the existing plant infrastructure.
That's right. Yeah. And you look at that production profile. So the 14-year mine life, 12 million ounces per year average. The first 4 years are 16 million ounces, a really nice high-grade starter pit. But if we want to backfill that and keep that high level of production, that's really, we get into some of this exploration ground, we can hopefully make some new discoveries in the district and really help backfill that production profile.
Good. No, we've been talking a while, but we barely mentioned Karangas, other than the fact that it's been a discovery in the last couple of years. What's your kind of budget split between Karangas and Silver Sand this year, bearing in mind that you've done most of the heavy lifting, as you mentioned a couple of times, on Silver Sand?
Yeah, so I'd say the budget's a little more heavily weighted to Karangas, just given that we're drilling. Right? That's how any exploration company really racks up the bills. And our spend is going to be heavily weighted to the first quarter of this year, which is now past. So we just wrapped up a 15,000 meter program in the first quarter with 5 drill rigs. And the objective there was we're not only stepping out on this gold mineralization at depth to the northeast, and there's silver mineralization close to surface to the southwest, but also completing our infill drilling, which then we're going to be targeting our first ever resource estimate at Karangas in the middle of this year. So getting that drilling done, certainly the heaviest spend item in the first quarter, and then we're gonna flip to resource estimation, and then targeting a PEA study at Karangas by year end. Okay.
Exploration companies, junior resource development companies are always short of cash. Your financial statement says you got $14 million Canadian at the end of last year, 14.4. So at some point in the future, you're going to have to raise more capital. It's a relatively tough market out there, but there are kind of rays of light. There are signs of optimism. Do you take a very flexible approach to that? Are you waiting for some key deadline to come through, or are you just going to see how it goes and just bear in mind that you're going to need to raise capital at some stage?
Yeah, I mean, it really is no secret that we will need to raise some additional funds at some point. And I think our year in cash, I think it was a little bit higher than that, but the point still remains that we ultimately, between now and the end of the year, we will still have some cash left on our balance sheet, but not a lot. So you never want to be in a position where you're raising cash from a position of weakness. So it's really in the context of the market. At some point between now and the end of the year, we will need to complete that. And so part of my job is just getting out there, and I've been to a number of different conferences and had a number of different institutional investor updates and and desk presentations, etc., just to make sure that we've fully gotten this word out. Because again, like all companies, but we certainly believe that we're not fully valued here. In particular, you look at this Karangas discovery where we haven't really gotten any credit in our share price for it. So we want to do everything we can to help get recognition for that prior to doing a modest top up here. But yeah, certainly that's the balancing act we've got to do. We want to get enough cash to be able to complete our work plans into next year, but also we're really mindful, as many of us are large shareholders, of excessive dilution.
And your decision to pause Silverstrike, is that a function of kind of two key parameters? One is that exploration is not really being valued, and two, preserving capital.
Yeah, exactly. And there's probably a third in there as well. The first being that we're spending the money and not getting the credit for it. So, let's wait for an environment where we will. And then the second being, you're right, is capital. We need to, drilling is where we really get the budget going. And so we've pressed pause there. But third is just internal bandwidth. That's another important factor here, where in the beginning of this year, we made the strategic assessment to say, hey, at each of Silver Sand and Karangas, those are each one junior mining company, and we've got two essentially in one company. And so as far as our resources go, we just felt like we wanted to make sure that we did a good job at both Silver Sand and Karangas, and really didn't want to risk stretching ourselves thin by pushing ahead at Silverstrike, especially when we weren't getting the credit for it in the marketplace.
And do you have too much on your plate? I mean, do one of these become non-core?
I mean, again, everything is always open for discussion. We feel like we've got a great team with a competitive advantage in Bolivia, and so we certainly have a lot of good work that we'd love to be able to put our heads down and get done. And then maybe at some point down the road, we can pause and take a breath and take stock of where we're at. But yeah, certainly all options are always on the table. But for the time being, we feel like we've got a healthy amount of work in front of us, and so we're going to continue to push forward internally in the current structure.
Great. And looking at your shareholder structure, you've got a kind of a slide in your a capital structure slide in your presentation. I see that Pan American Silver is kind of just under 10%, and you've got Silver Corp at 28%. Two industry partners with a combined 38% of the company. Does that you're coming into the company with very fresh eyes. You must have seen companies which are kind of constrained by the strategic relationships that it's got within itself. Is that a concern for you? How does that relationship work across the shareholder register?
Yeah, I mean, I certainly don't see it as a concern at all. I actually see it as a point of strength for the company. We've got two very sophisticated industry partners as our major shareholders, and so when you think about their interest, they've got fiduciary responsibilities to their own shareholders. So they really, with that investment position, are going to be doing what makes the most sense as rational investors in the company. And so, yeah, I think as far as strategy goes, tension between, I just think it, if anything, it gives us more intellectual horsepower as a company. Certainly having Dr. Rui Feng as our founder and a board member, and Pan American bringing their VP technical operations, Martin Laforne, he's on our board. So, and we think it's a real strategic asset for the company. And they've also been when we talk about needing to raise money, having in particular Silver Corp being a cornerstone, potential lead order type investor in any financing that we do, certainly is something that we're very proud of. And again, getting out there and telling the story from my new seat here, it's certainly my objective to continue broadening the outreach, not just to investors but to corporates also, given that our assets are so strategically important.
But surely the interests of the shareholders are not aligned, in the sense that the corporates have got a kind of a long-term interest in perhaps it's kind of a takeover target, and they'd like to see the value lower, whereas your non-strategic interests would like to see the valuation higher. Isn't there a conflict in there?
Um, I suppose you could frame it that way, but at the end of the day, like if you look at, say, Silvercorp's position in New Pacific Metals, it's like a substantial portion of their market cap. So they're certainly not going to be incentivized to do anything to impair that valuation, because it really has a direct drive impact on their bottom line. So I don't see it from that perspective having an impact. But regardless, the best thing we can do is just continue to generate interest, in other names and bring other folks and eyeballs to look at the name. Because at the end of the day, if a third party, let's say there's another party that comes in and puts an offer on the table, then they ultimately you establish a new market price, and it really takes care of everyone. I mean, so I don't see I certainly don't see it as a particular issue, as long as we can continue to drive the value and have it be broadcasted and well known in the industry. Certainly other parties out there, given how strategically important these assets are, they won't let them go on the cheap to anybody. So
yeah. And are you getting inbound on the basis, on the back of the kind of the technical advancements that you've done over the last few years? I mean, I know you've only been there for 3 months, but what's your sense of kind of the industry awareness of what you've been achieving?
Yeah, I think it's been really encouraging, I would say, and industry awareness. I think folks are well aware of Silver Sand, but getting out and telling the Karangas story, that's what it's really surprised me, is how few people have never heard of Karangas and aren't aware that we're putting these 500 plus meter runs of over a gram gold at depth, and these the extensive silver mineralization that we've discovered near surface. So that, to me, I think as we continue to tell that story and put out the resource and then the PEA, I think it'll become impossible to ignore. And then the interest, not only from investors but from corporates, I think will just continue to grow from where it is already.
Good. And is your role principally kind of market facing? Do you get down to Bolivia much?
Yeah, that's market facing is certainly a key aspect of it, given my background as an institutional investor, portfolio manager. Corporate development, again, engaging with the corporates out there, and then certainly supporting Rui in strategic initiatives in the company, whether it's the technical studies, the permitting efforts. Yes, that's all falls within the scope of my responsibility, and I'm actually on Saturday heading back down to Bolivia for 2 weeks. Going to be there, working with our local team, and given that this is a critical moment for us, and some of the permitting and community relations stuff at Silver Sand. So really rolling up my sleeves and lending everything I can to that effort is certainly an important part of my job, in addition to just the capital markets and corporate development sides of my role.
Well, Andrew, good luck in Bolivia. Very nice meeting you, and I look forward to catching up with you as the news flow progresses through the year.
Thanks, Merlin. It's been a pleasure. Appreciate all your insightful questions.